Let's take a look at crypto ahead of the Fed. At the start of this month, we said, September usually twice as often as it is bullish, it is bearish. So it's, more likely to be a bearish month than a bullish month. It's the worst performing month of the year. But these are all averages. So it means that every now and then, we will get a good September, and we have had a really good September. And quite often those good Septembers come when it's the year following a Bitcoin halving, particularly for altcoins. That is usually when alt season comes, if it comes. Now remember, we've got very limited data with Bitcoin and crypto because it has not been around that long. But based on the few cycles that we have had, that normally is the pattern. So far, and at the start of the month, we said, everything is pretty positive for Bitcoin, at least leading into mid-month, which is when we get the Fed, and it's also when we get options expiration for ETF and futures. And these are the CME futures, which are so many more, there's so much institutional money in crypto now, and these are really good hedging options. And so with more and more institutional money, these mid-month options on the ETFs and the futures have more and more significance. That's just how it is. What we've also seen is with that institutional money coming in is Bitcoin itself as a market maturing. It's a little bit less volatile and a little bit tamer, if you like, than it was. I still think we see pretty strong moves higher each time, but they are kind of moderating a bit. So as we head into this kind of mid-month pivot point, and I've spoken about this before, the mid-month often is a bit of a pivot point for Bitcoin. If we take a look at this on the daily chart here, we can see, for example, that we had at the start of July, we had a really nice rally. Then mid-month, this was the high, and we declined for the rest. Start of August, we had a really nice rally until mid-month. 14th of August was the high, and we can go back to other months and we can see that that turning point often is around the middle of the month, and more so for ETH. Now sometimes, when we're in a downswing, it works the other way. For example, March, we made the kind of low mid-month. If in April, we had a bearish start to the month and then we rallied. So it may be, if we are going to see another swing lower in these assets before we bottom and we get the usual seasonal October, November rally, which is where we usually have the strongest months of the year, then this mid-month turning point that we are at now, we started the week, this week with the high for this week, and that's the 14th. If we look at previous months, we're kind of here, and it's, we've kind of stalled. So while stock indexes have pushed higher into the Fed, crypto hasn't been buying it. We've seen in most assets really shallow pullbacks, sideways trading, and pretty choppy moves. In a lot of assets that I was looking at, I was thinking today had the potential to be a really bullish day based on kind of lower time frame chart patterns. These moves lower, for example, from this high that we made on Friday, this looks like a very nice three-wave correction. We haven't pulled back too far. This is an 4-hourly chart, but if you think of an uptrend like this, so we make higher lows and higher highs, this is our uptrend. We stay in the uptrend as long as we don't break this previous low. We can come back to it and we're still in an uptrend. When we break that low and then we make a lower high, we've reversed the trend. So far we haven't seen this. From the low that we made at the beginning of September this month, we have been in a really nice bounce back uptrend to start this month. Here we are at that nasty kind of mid-month point then, and it's, are we going to keep going are we going to keep going from here, or are we going to see another leg lower? Because this is the highest high that we made on the 14th of August. Let's go back to the daily. And because I'm a big fan of three-wave corrections, it is a little bit possible here that we see another leg lower. And what we have seen from the 1st of September low is just a three-wave correction before we see another leg lower in Bitcoin. So I'm watching pretty closely what happens here. When I look at the daily, I think as long as we hold above these daily moving averages, we're still good. You know, the daily 50 moving average is a really powerful tool in crypto assets. Also, if we look at fib retrace levels and we look from this high to this low, here we are a little bit sideways at this 50% level. And if you think of fib levels like a ladder, that, you know, as long as we don't break the one below it, then we're good. That puts us with key kind of fib support here at 113,700. I kind of don't like drawing the fib this way, and I'll tell you why. Because these other fib levels didn't have a strong reaction. So when I see that, I'm going to go from this most recent 5-wave move here and see, did these fib levels have a better reaction? I have to say they didn't. So if we go all the way back then to the low we made in April when everything bottomed, we kind of did have a reaction here. This 236 fib, it was support, then resistance when we were underneath it. So it's possible that we see a little bit of a bigger pullback. And I would say back underneath then 112,500, I would be bearish and selling it. So the potential support to keep going higher then is a little bit higher here at these daily moving averages. And I would be bearish back underneath 112,500 because it's options expiration week, and market maker, you know, if we break out of the ranges that the market makers are holding us in, we tend to see a bit of a stronger move. But quite often, you know, prices get pinned around a point going into options expiration, and so we might just die. You know, we could get some volatility with the Fed tomorrow, but it may be that we just go sideways. Let's drag this out a bit and go, if we go, for me, if we take this most recent swing low, which was the beginning of April here, the big swing low, and we do 50%, so if we break down and we see another leg lower, by far my favorite trade setup is a three-wave equal measured move back to a 50% level. By an equal measured move, I mean if this swing and then another swing lower from here are equal, I look for that to be to a 50% level. And this is, when I first learned to trade, it was like one of my favorite setups. And we can see an equal measured move back to this 50% level brings us back to 99,359 and back to this swing low. So I think if we see a weak second half of September, which gives us a buying opportunity going into October and November, around this 100,000 level would be for me the ideal place that I would be looking for. I also like to draw fibs from the big swing. So if we go all the way down from the low that we made in November 2022, no surprise, 98,600, so around 98,600, 99,000 is also the 236 fib from the low that we made in November 2022. So this month is a really good month to be defensive, and I would not be surprised to see a pullback to this 98,600 level from here after this week. And the VIX expiration is also with the Fed tomorrow, same day. Quite often after that, I think if we see that some weakness in the second half of this month and we come back to here, this would be a really good buying opportunity. We could also, if we draw what we have done from this April low and the start of, this is August 2024, in fact, this is our April low as a second touch. We can draw this as a little bit of a parallel channel, if you like. Let's take these fibs off. And you can see that we've got two touches on the upside and two touches on the bottom side. And here we are in the middle, which is my least favorite place to play. But a pullback here to this weekly 50 moving average. Look at what happened in previous sell-offs when we've pulled back to this weekly 50 moving average. We did it here in August 2024, and then we had a really nice 50% rally of this swing. We did it again in April, and we've seen this magnificent rally. If we pull back to this daily 50 moving out, weekly 50 moving average, this previous swing low, this 236 fib level from the low, the 50%, there's so many reasons why, if we see weakness after the Fed and options expiration this week, where I think that we could come back to, that would be a great buying opportunity for the later months of this year, which are usually so bullish. So I am not, I think, forearmed. Now, clearly we're still in an uptrend. So what's going to happen tomorrow with the Fed? We've seen a really good move in stock indexes ahead of this Fed meeting, which has not been mirrored. And so does that mean that the Bitcoin and crypto is going to react less to what's happening with the Fed tomorrow? Not necessarily. You know, every now and then crypto decides it wants to be really volatile, and it will do that. The market has, so, you know, there's a 90%, 93% of the market probability is a 25 basis point cut tomorrow. So for me, you know, that's neutral for the dollar, and I think it should be positive for stock indexes into the end of this week. However, it may be with 93% of the market expecting it, that it's all priced in, and we could see potentially a sell the news event after this, because there is a percentage of the market who think that it's only 8% at the moment that think that we'll get a 50 basis point cut. I don't think that we will. If we were to, it would be very bearish for the US dollar, which would be bullish for everything priced in dollars, like stock indexes and crypto. I think what they say in the policy statement about going forward would be more than that. So if they talk about more than 50 basis point cuts by the end of the year, or another cut by the end of the year, or what's going on, then the same applies. However, one of the reasons that the market is so sure that we are going to get a cut, at least 25 basis points, is because of weakness in the labour market. So if they say anything about the labour market that is could trigger, you know, we could see one of those in immediate kind of bullish moves, and then it's not very good news for the general economy. There are some other things that Powell could say in his press conference that would have quite an impact. For example, he could say that he's considering early retirement. He's been really bullied by Trump. If he were to say that he was considering early retirement, I think there's an outside chance of that. It would be very bearish for the US dollar, and it would be very bullish for stock indexes because of what we have heard and know about who Powell's replacement is going to be. So there are some kind of outside things that could happen tomorrow, but pretty much it's priced in 25 basis points. And if that's all we get, it could be a bit of a sell the news event for the second half of this month. I just want you to be prepared for that, because it's much better to prepare for it, because then you know, we can buy the dip for the really good months that are coming. This is not usually a very good month. So just be careful with leverage ahead of the Fed and this option expiration this week. We have actually kind of seen the fears of a downside for Bitcoin and ETH have kind of eased in the options market. We've seen a bit of a recovery in call put skew. It was quite bearish before this week. It's kind of improved. But once this options expiration is out of the way, then I think potentially, particularly, you know, what would bring us back down to this 100,000 level, I think a Bitcoin back underneath this weekly 20 moving average, back underneath the previous highs here at 109,000. I think that 99,000, so a 10% decline, is pretty much on the cards if we particularly if we were to see a weekly close underneath 109,000. And one thing about Bitcoin moved lower is they do happen quite quickly. And so if we were to do this first decline was only 3 weeks, so that kind of puts us in a really good spot for October, for an October rally, if we were to see that. So that's how I'm seeing Bitcoin. Now, short term, what would suggest that, at the moment, we're just going sideways. We're not in any kind of a big deal, kind of a bearish reversal. We're holding this previous swing low, but I kind of feel like short term, once we get tomorrow out of the way, here's our sideways range. We've got a double top here. Once we get tomorrow out of the way, here's our little double top sideways range. If we break the lows of this range, we're likely to go double that distance and perhaps further. That's still not much of a correction. So far, we really are trading very quietly as we head into this Fed meeting, so no big deal there. ETH is in a little bit of a sadder position, I have to say. When I was looking at ETH, this is an hourly chart of ETH. I said before that my favorite trade setup is a 3-wave equal measured move, so 1, 2, 3, back to a 50% retrace. So if we look at this in ETH, where we were sitting was a pretty textbook equal measured move here, and we have not reversed. So here's our first swing lower, if you like. Here's our second swing lower. It was equal at this 50% level in this hourly 200 moving average, and we've got smacked down and pushed underneath it. Now, if we were to bounce here and close back above it, and this was a false breakdown, which sometimes happens, false breakdowns for me are pretty bullish. But if we can't and we get stuck underneath 4,500, because if we draw, then we broke this 50% level. If we bounce from this 61.8 level, I wouldn't be surprised to see something like this. And then, in this 61.8, 38.2 range, this is where the bulls and the bears usually fight it out. And so I was disappointed that we didn't get, I was looking for perhaps another positive swing in ETH here out of this level. Hasn't happened. One of the rules I apply, so if you, let's tidy this, take out a lot of these levels out. So this is the 50% level that I was looking for a bounce from, and I look for a bottoming pattern here on lower time frames. So this is the 4-hour, and a close back above the 38.2 usually is a bullish trigger when you bounce from a 50% level. So that didn't happen. And when you do, your first target, mean reverting markets tend to keep mean reverting. So 50% of this drop would be your first target, and then you might see 50% back. And if you're going to keep going higher, you see a pattern like that. I'm sure in this chart we can find an example of one here in ETH. Let's have a look. Okay, I think this one was here. Let's hide this. So if we look at this swing here that we made in August. So if we measure from this low to high, this was, look, a textbook 3-wave drop into a 50% level. We got above this 38.2, then it became support, and we continued to rally until new highs. So this move that we made here, which we traded in my group, is one of my favorite textbook bullish setups. So this is our equal measured move here down into this 50% level, and we reversed. And again, your confirmation is above this 38.2 level, and particularly pulling back and finding support from it in this really nice bullish pattern here usually says that's corrective, and indeed we saw new highs from this pattern in ETH. So that's my favorite trade setup, and it's not working so far today, which is a little bit of a concern. But if we can recover that 50% level and we close with a really long tail, which, let's face it, we see all the time in crypto, and we close bullish today, then I think that we could see a bigger pullback and this three-wave correction could potentially send us back to retest the highs. If we don't and we kind of get stuck and we continue lower, it's not going to look so happy. And there was quite a few of these bullish patterns around. Let's talk about some of those as well today. But I'm going to fill some requests first, because I say this quite often. One of my favorite, let's take a look. One of my favorite charts and assets, I think, is BNB. I think BNB is undervalued mainly because, in fact, let's do it here. BNB is undervalued because it is banned in so many places. So a lot of people, like in the UK, haven't been able to use Binance. It was banned for a long time or restricted in the United States. And BNB is 8 times bigger than Coinbase. And when you look at how Coinbase trades on the stock exchange, I think that what they are doing with the BNB token, which does have value and utility, is pretty interesting. And this is a market that is trading at new highs. And so I think this one, buying this on pullbacks, is also pretty interesting. At some point, though, we're going to get to 5 waves up from this low. I'm not sure it's finished yet, but when it does, potentially, 1,000 and higher in BNB, just because they're doing so much in the space. So one thing, another one that is really popular for very good reason is Solana. Now, it's not just because there's a Solana ETF coming. I made a deep dive Solana before, where I said that I was actually not bearish long-term Solana, but I do think when I zoom out and I look at this on the weekly and how we failed at these previous highs, what I would normally expect to see here is a 3-wave correction. And I think that the decline that we saw at the start of the year in Solana was the first leg lower, and this to me looks like a B leg, and this final section here looks like a little bit of a rising wedge. Now, if Solana is going to keep going higher and we draw this just like ETH as a parallel channel, here we've got 2 touches on the lower side, 2 touches on the higher side. If we see a bigger pullback here, we could in Solana come all the way back to that really critical 181 level that I've spoken about before. There has been a really pivotal high and low level, and we could come back to these weekly moving averages in the bottom of a channel. Potentially. For now, we're still going higher. This is just a shallow correction in an upswing. But we've seen before, when Bitcoin first launched in the futures and institutional money got an opportunity to sell something that they maybe weren't too keen on, we could see some Solana, sell the news events once this is launched. So we've got the Ripple, we've got Solana, and we've got the HBAR ETFs coming. So if we take this most recent swing, so if we go from the August low or the June low, but we're going to take this most recent swing that we're in, for me, as long as we hold that 236 retrace level, we're still going higher. Let's put it in Solana. And that's 227. Underneath 227, we're going to look for a bigger pullback. I'm going to put that all the way back to this low and say we come back to 213. And that's trend support. And if we break that, I am looking for back to this 181 level, this pivot level, and the bottom of the channel. And if we see a second half of the month pullback in a lot of assets, that I think is where Solana goes. I'm seeing a lot of really bullish articles in my mailbox today about Solana and how Solana's stealing the spotlight. If you just associate Solana with meme coins, I think it's quite easy to have a not so positive impression of it. However, there are lots of things that Solana can do that are pretty good. One thing, when we look at some of these meme coins that have launched and been so big, particularly the Trump stuff, and Solana has handled huge volumes of transactions for me without without missing a beat, really, which for me is pretty positive. I think that if it did something else, it's got quite a lot of utility. That's what I'm trying to say. I'm pretty bullish ETH because it's a platform and it's pretty good, and because so many of the stable coins are based on ETH. And if you are bullish stable coins and you think that their use is just going to expand and expand, then ETH is going to do well out of it. In the UK at the moment, God, it's so depressing to be in the UK with crypto legislation, which is so far behind the United States. So the Bank of England are proposing limits on how many dollar-backed stable coins an individual can hold. The United States is kind of hoping that everybody's going to buy dollar stable coins, which means we're effectively buying US treasuries to get them out of their debt problem. And at the moment, the Bank of England are proposing limits, I think, of £10,000, which is about $13,600, saying that if we hold more than that, it's a systemic risk, which is so against, everything that Bitcoin was founded on. In crypto, I'm going to give a little bit of a plug here. And first of all, thank you to Bitcoin for sponsoring this video update ahead of the Fed. They are a decentralized, no KYC exchange. And I think it's quite important for a lot of people to perhaps have an account at one of these exchanges. And the reason is that in the beginning in crypto, it was scammers stealing your money and hackers, and the time is rapidly coming where it's going to be the government stealing your crypto. And I'm not talking about the Trump crime family here. I'm just talking about regulation and taxation. All of the exchanges that are allowed to do business now have to do KYC, and from the start of the year, not just in the UK but in a lot of countries, the tax authorities will be able to track your trading transactions in real time. That's what they're doing in the UK, and if they're doing it in the UK, they're doing it in Canada, and they're doing it everywhere else, and that includes the United States and a lot of other countries. Now, that means that for the first time, the amount of tax you pay is based on how much profit you made, and that's based on what price you originally bought whatever crypto asset it is. So if you're thinking, oh, that doesn't bother me, I don't trade on exchange, I have all my coins very nicely in my Ledger wallet, and I've got them all staked, and when they're unstaked, I'm ready to sell them, that's what I'll do. I'll just send the money. The first time you send your crypto from your Ledger wallet to a KYC exchange, your wallet is then linked to your account and to you and to your tax authority. So you kind of need a buffer between them, because you don't want that to happen, because at least the first time, you have an opportunity to make sure that, especially if you bought your Bitcoin at super cheap or whatever it is, or whatever Ripple or whatever asset you've got. So if you can send your crypto to a non-KYC exchange, and you can change it to something else and then change it back, and then then send it via a new wallet. So make a new wallet, something like MetaMask or a Phantom wallet or something, and then you send that to your KYC exchange where you're going to convert your money out. Then you have an opportunity perhaps to improve the price in your favor for taxation purposes for which you bought it. Now, I'm not going to elaborate anymore, and so I really like Bitcoin because the fees are low, and because you can draw $1 million a day, no KYC, and I think you should find, there are other options, but find yourself an exchange that can do that for you, because going forward, taxation and tax monitoring is going to be an issue. And so this is why I'm also really bullish, not just stable coins, but privacy coins as well. I think we're going to need them, because everything that they're doing, especially if we get into a bit of a financial crisis like we did in 2008, then yeah, I think things could get really tricky. And, you know, one of the main benefits of crypto was we had control of it. And yeah, we need to keep that control. So, just a recommendation. I really do like Bitcoinex for that reason. Just try it out. You know, put $100 in and have a play, make sure it works, and see if you like it. Can't see more than that, fairer than that, right? Okay, so the link will be in my bio, and if you like this, please like it, because it really helps the algorithm. Again, I'm not here for tax advice, but there are things that you can do to protect yourself. Let's face it, inflation is theft. And what the devaluation in our fiat currencies really is theft. We need to be in assets that improve. And everybody talks about how the Fed, why would the Fed, you know, cut rates when the stock market's at all-time highs? Well, the stock market's really only up as much as the dollar has been devalued. If you look at the stock markets in real in real terms, accounting for inflation, we are not really at those amazing all-time highs that we think we're at. And I think that this is why gold and metals are doing so well. Okay, I've ranted long enough. I'm a little bit worried that we could see a bigger pullback for the second half of this month, and I'm looking for buying opportunities. The first one in Solana is 213, and I think if that breaks, that we could see a bigger pullback to this 181 level, and I would like to see a bounce there. Okay, let's we've talked about BNB. Now, BNB for me is in a really strong uptrend. Do I think that this is the greatest place to buy it? No, I think it's a little bit too overstretched on the upside. And I like three-wave pullbacks. And if we were to see a bigger three-wave pullback in BNB, second half of this month, this would definitely be on my list. At the moment, if I look back to the lows that we made in August, this looks like a wave 1, a wave 2, and I think we've just done a wave 3 and we're in a wave 4. The price action that we have seen looks that way. Now, if I look at BNB and I go from this beginning of the month low, the most regular pullback that we see in a wave 3 is a 38.2, which would bring us back to 904 in BNB, which brings us back just above to these highs here in this zone. And I think perhaps a little bit lower underneath 900, and we might see a bigger pullback. But I would like to see a three-wave pullback to this zone between 900 and 905. And I think that this is set for a fifth wave higher, and I'm going to be watching the price action there in BNB. Just watch out that it doesn't, a crypto market, high tide floats all the boats and vice versa. So we could see some nasty moves and stuff if it turns into something bigger. So let's take a look at another ones that I'm pretty fond of. Here's Fetch. Now, one of the reasons that this is a weekly chart of Fetch, and we've been doing this really strong consolidation. It's been really tricky, I think, since the spring. This one bottomed in April like everything else did, and this summer has been a really tight consolidation either way. Because this looks like a big first swing higher, either an A or a 1, this looks like a three-wave correction. I'm looking to see if we can break out from this in at least another leg higher, and see if this will turn into a wave 3, because bigger picture, when I look at Fetch, it looks like a big 1, 2, 3 to me. And whenever you bunch up like this around big moving averages, the last time we did this was in 2023, we bunched up around these weekly moving averages, and we saw a massive, really powerful move out of it, where we went from 0.23 all the way up to 3.3. So if this three-wave correction is over, I'm looking for a really strong move out of here. For me, the first target, though, that we need to get above is going back to this all-time high, to this low. The first target that we need to overcome to be going up is at 1.085, which is the 236 FIP. Now in this correction, if we get another swing lower in fetch, so at the moment we've done this first swing lower and a bounce, and then this second swing has been 61.8 of the first swing, which is very common in corrections. We can measure it from this high to this low, project it from here. Here we are sideways at this 61.8 level. It's a 0.612. The problem for me is that if we break underneath it and get on a weekly close underneath 0.612, we are going to do that bigger equal measured move deep pullback potentially. So a really kind of crucial level for a weekly close, because if that then becomes resistance, we haven't really bottomed and we're not going to continue higher from here, and potentially we could drop to 0.44. So at the moment it's just tricky. You know, this is just a pullback. We've got 5 waves up. We've pulled back to this previous swing low. If we look at this, where we are in this swing from this low, we're at that kind of really cozy 50% place in the middle here. Let's put that 50% level in here at 0.638. Now, if we apply this on the daily from the low that we made at the end of August, then we know that we're going to be going up if we get back above this 38.2 level here, which is at 0.652. So I'm watching this level really closely. Above 0.652, then we can say that we are going up, and I'm watching to see what this does after the Fed. Are we going to continue lower, and are we going to get stuck underneath this previous sticky level at 0.612, or a close above 0.652? And we can say at least, you know, an attempt then at higher 50% of this drop, and see, you know, we might make a, if we get above here, we might make a pattern something like this. So that's what I'm looking for in Fetch AI. It's one of my favorite. There are a few, you know, that have got really kind of nice 3-wave corrective patterns. I talked about Nia in my last video. That's also, even on the short term, little BERT that I like, I will cover him in a minute. Let's take a look at them. So Ripple, Solana, Fetch, are all, I think, setting up, but we could go either way on the Fed, and there is a possibility that the second half of this month, after the Fed and options expire at the end of this week, that potentially we could see some weakness. So we need to watch out. Let's take a look at XLM. Got a request for this one. Now, if we go to the weekly in XLM, I think this is a lovely pattern, and I'm pretty impressed with it. If I take the big all-time highs in 2021 to the lows that we made down here, we have done one of those really nice fib patterns and nearly, not quite, reached this 786 fib level, and here we are back in the middle, kind of fighting it out. We could draw our fib patterns from these lows to here. 886, 236, back in the middle. So 50%, if we could say in this one really that the 50% of all-time lows to all-time highs is kind of where we are getting stuck. That's where we couldn't on the weekly close above when we tried this summer, and on any rally from this lovely 3-wave correction, this level 0.467 has got to be our first target. And above 0.467, I think back to these highs and next leg higher. When I look back to the lows that we made in 2023, it looks to me like wave 1, a nice wave 2, wave 3. It's very overlap. You know, this was a very deep retrace, but potentially we've got another leg higher. Even if we just count from this low, a breakout from this flag pattern that we're looking at here says to me that this is probably a wave 4, and we are set to retest these highs. So short term, particularly, we had this huge move in July, and we've kind of retraced half of it. Whenever you see this on a weekly, if you draw your fibs between the open close, you're looking for 50% back to hold, and we've kind of done a rounded retest of this 50% level. Here it is from this low. So we did a sharp bounce off it, And now we've done this lovely rounded retest bounce off it. And now we need to see, are we going to launch higher from here? I think this looks pretty good. But the problem is that we really need to break out of this. So that's going to be our first target here. And so a bounce from here and a close above 0.417 to me most likely looks like a move higher. The problem is, I'm not a huge fan. Let's take this away. I'm not a huge fan of wedges or declining wedges where they point in on each other like this, because when you break out, you know, in Elliott wave, parallel channels are much, much more reliable and common. And when you break out, right, if we say this is a parallel channel, we go from the highs like this, that top of the parallel channel, if that's what we're making in a bigger one, is likely to be our first target, which would give us up here. And a three-wave measured move like this, or a three-wave correction, the most common retraces are 786, so that we can give that a level exactly here at 0.482. So we can say if we break out in XLM, so if you buy it here, your first target is 0.41. Above 0.41, we can say we've broken out, and our next target is 0.48, where this would be a parallel channel. We don't want it to continue lower in a bigger one like this. That would not, what we are looking for is a shallow pullback, and that means not back below the 61.8 fib here. Take the others away. So as long as we don't drop back underneath 0.45, a shallow pullback, and then a breakout for real, and then we can negate this line and say, yeah, we're on our way higher. So when you draw fibs, you know, they're like a ladder. If you drop back underneath the one underneath, you're kind of in a bigger correction, if you like. So the ideal bullish pattern here would be something like that. So that's how I'm seeing XLM at the moment. Flat moving averages on the daily, no trend. I would like to see a swing higher here, but I think that if we see a weak September, you know, we could even end up with a double bottom or something like this before we break out. So it's not quite, in terms of momentum, where we are, not quite clear yet that we are going up. I like it on the lower time frame, but look at these 4-hour moving averages, completely flat, completely bunched up in the same place. So we're kind of here. Could we break higher from here? Yes, we could. Those are the targets for XLM then. Okay, so there's a few that are making really nice little corrections. So this is BERT. This is the last time we looked at. This was my big chart here. Key support was here at 0.05. This was our first target. And as long as we hold the support, we are going to look for the second target next, which is at 0.1, which is pretty cool because here we are at 0.5. So that would be a double. And if we look at what we've done on the lower time frames here from this high to low, then we've pulled back to support in a really nice equal measured move correction. So look, we held the equal measured move level, we pull back to our ideal support level. There's everything to love here. When you draw an equal measured move, getting back above that 61.8 level is at 0.065, kind of confirms it. So daily close above 0.65 confirms it for more upside in BERT. That's also where our daily 20 moving averages. So there's a lot to like about a bounce from here. I am going to be looking for that. And short term, I think we're going to test it because we're well above that 236 fib level and setting up pretty nicely in BERT. Let's see if we can break out again. Next target above this 0.64 level, 0.77, and we need a daily close above 0.77 and then 0.1, and that would kind of confirm this three-wave correction. As I said before though, when you see a three-wave measured move like this, the first target is usually 78.6 of the whole swing. So if we do that here, let's change the color so we can see it clearly. Let's make it, I don't know, bright blue. The 786 is up here at 0.08, which means we kind of overshoot this level. So maybe when you see this, sometimes you'll see a correction like this. Yes, if we can break out, then for me, I expect a wobble in the middle in this choppy zone, and then 0.77 to zero point 0.8 would be the first target zone, and above there, that would also be, you know, if we were to connect these highs, this would be kind of a third touch of this. Remember, horizontal levels and channels, and when you draw them, let's draw it from this side here, like this, something like this, whichever way we do it. Third touches are very often false breakout, and then you stay within it first time. So buying the breakout on a third touch, it's much safer to wait for the pullback retest, okay? Because quite often, to make sure that it's working, because quite often you'll see a false break and then it'll get back in, and then a correction before it breaks for real if it's going to. So just be careful of that. So a really nice three-wave correction of my favorite kind in BERT. We are getting knocked back a little bit today. And remember, you know, in crypto particularly, double bottoms and double tops are very common. So for example, when we made a high here, we retested it. When we made the low here, we retested it before we rallied. Not always, but common. So it would not be weird if everything gets a little bit weak that we don't come back and possibly retest this 0.05 level. And I think if we do and it holds, that it will be a really nice opportunity. It's just this month we need to be really careful that we don't get too chopped up. So finally, let's go back to Ripple, which I've been trading, and here we are. I still really like this one, I have to say. When we look at the daily moving averages here, we had this lovely three-wave correction. So we go back from the lows, I think we're in a bit of a wave 4 here. So we go back to the April lows when pretty much everything bottoms. We've got a wave 1, wave 2, wave 3. I think this is a wave 4, and I'm looking for it to attempt another leg higher here in Ripple. The problem is Ripple that we're at a really tricky level. So it might be that we don't get a new high. We might just retest this 3.317 level. It all depends how this ETF, you know, how it goes down. If we continue higher, 4.14 is my next upside target, and then potentially 5.18. And quite often in crypto, you know, wave 5s can extend quite a long way. So we're counting from the low in April, 1, 2, 3, 4, and we're looking for our wave 5 to set up. And it should unfold in 5 waves as well. But for now, for this 3-wave flag, we haven't quite broken out yet. But I really like it, and I really like how we're holding above this 2.97 level, which has been tricky before. You can see here. And yeah, I think I'm feeling pretty bullish this one today. I like how we've pulled back into these moving averages, and I think we're setting up another swing higher. And if I look at it again on the hourly, it's just a bit like ETH. It's not quite broken out. So what we said before, the 236 fib, if we get above it and hold above it, that we're likely to keep going higher. So if we go from this high here, we need to hold above. Oops, I haven't quite done that right. We're holding above the 236 fib at the moment. So this little hourly 3-wave pullback, I think this is really bullish to have another go higher. The problem is that this may be just a 3-wave correction. So we really need to break these highs to keep going. But for me, it's looking pretty favorable if we can break out of this sideways zone that we are in Ripple, and I like this one for a 5th wave if we can do it. So they're all setting up pretty nicely, and if these big ones can go first, then it sets us up really well for smaller alts. It just may be that we have to wait and we see a second half decline, and so I suppose the next few days are going to be really critical. So this is my weekly look ahead for what's happening. If you would like daily updates, I am at themacrotrader.com. The link is in my bio. Thanks for watching, and please, if you could, just like this, let me know you're here. It really helps the algorithm and help more people. And I know I wasn't here to give tax advice, but if you know someone who trades crypto, it might help them. Thank you.